If someone's talking about money and they're showing off how much they bought this for, how much they earn, is that a good money belief?
Finance bros that are in their Giles driving fast cars that they've rented. Oh, is this actually an insecurity?
When you speak to certain people, they never change their money narrative.
Don't talk about that. Oh, money's rude. Or you can't ask for a pay rise. Like, you're going to be emulating those characteristics as well. If you feel like the biggest barrier in your life is your lack of money, then you need to find new ways to earn more money. There's no way to budget yourself into more income.
It's very difficult though to just say, just increase your income.
So many of us think that the system is against us, and most of the time it is, because it wasn't built for us.
Talking about money is a good thing. If you talk about money too much, it could be an insecurity. How do you manage your money?
How do I manage my money?
Most of us were never taught how to manage money, yet we're expected to figure it out while juggling rising rent, the cost of living, and trying to have a life. For a lot of millennials and Gen Z, financial freedom feels like a dream for other people. And if we're honest, sometimes the numbers feel so overwhelming that we avoid even looking at them. My guest today, Abigail Foster, wants to change that. She's obsessed with making personal finance clear, human, and actually useful, whether it's through her book, The Money Manual, her content, or her talks in schools and on TV. Her mission is to help people feel good about money and confident in what's possible. So today, Abigail's here to take us from feeling stuck to getting unstuck, to show us exactly how we can save, invest, and create financial freedom without needing a finance degree or a six-figure salary. This is your step-by-step money masterclass. And if you enjoy it, I'd be so grateful if you could share this episode with a friend and press the like, follow, and subscribe button. I'm so grateful to every single one of you who joins me in these episodes every week. I cannot wait for you to all to hear this. Let's get into this episode. Abigail, hello.
Hello.
Welcome to Millennial Mind.
Thank you so much for having me.
I am so sorry for this shambolic podcast today. We are 5 days before my wedding. Everything is going wrong today, and it's the hottest day of the year. But we made it, and we're still here.
We did.
And that's the most important thing. Why should someone stay and listen to the end of this episode?
Because finance is not taught at school. And so many of us think it's our fault that we don't understand finance, and we think that the system is against us. And most of the time it is, because it wasn't built for us. And so understanding more about your money and personal finance just honestly changes the game for everyone and in all aspects of their life.
A lot of people feel that they'll never get ahead of finance though, right? And they feel stuck and they feel frustrated and they feel they'll just never really understand it. And like you said, it's not taught in school. But why do you think so many people feel stuck that they can't change that?
Because money is actually more about emotion than we think it is. And we actually tie a lot of our emotion to our thoughts and feelings about money. And you develop, so there's a stat that says you develop your money mindset by age 7. So the thoughts and feelings you have about money are often emulated by your grown-ups around you when you were in those formative years. So often your parents or your grandparents or the teachers around you. And you'll see similar aspects of how you think and feel about money with your parents. And you might have parents that were very anti-debt, or maybe they were in lots of debt, and therefore you've emulated those same characteristics, and then you feel like, oh God, I'm just going to end up like them. But actually that's not always the case. Like, there is always room to grow and to change.
So talk to me a little bit more about that. At what point do you realize what your money habits are? How do we recognize them? So someone's sitting listening at home being like, oh my God, I think I am a little bit similar to my mum or my dad. One, how do they recognize what they are? Are they like categories, or, you know, how there's love languages? Are there like money languages?
Maybe we should develop some money languages, but there aren't one size fits all languages to how you view money. But there are things that you'll notice and feelings you'll feel about money. Because some people are very comfortable talking about money, very comfortable holding money, looking after money. They're just very relaxed around it. And some people are very much the opposite and will say things like, oh, money doesn't grow on trees. Like, oh, I can't afford that. Oh, I can't do that. Like, have very constricting language around money. And that's always a big kind of alarm bell to me, because then I think, oh no, you're not comfortable yet. And it's because you don't know enough. And it's because you're lacking in education at the moment. So I would personally say, every single person will be different, because we've all had different upbringings. Even when it comes to siblings, like, you could be very different to you, someone that was brought up in the exact same house as you when it comes to money. It's just your lived experiences. So yeah, I wouldn't say there's one rule, but hearing, like it's usually the easiest way to know how you think and feel about money is listening to how you talk about money to other people.
Give me an example of good money habits and bad money habits.
So,
or beliefs, I guess.
Yeah. Good money beliefs is you feeling empowered to talk about money, to educate yourself more about money, and to be in the conversation. The opposite of that, it's hard. I don't really want to say bad, but the opposite of that would be someone that's very avoidant of it. Someone that won't talk to you about it, doesn't want to hear, doesn't want to learn, just thinks that it's beyond them or they can't ever understand it. And that worries me because I think, well, if that's how you feel now, it's never going to get better because you're avoiding it.
If someone's talking about money and they're showing off and they're constantly saying how much they spend on stuff or how much they bought this for and how much they earn, is that a good money belief?
Oh, probably not. And do you know what? Someone said this to me the other day. They said, often the things that people are loudest about are the things they're the most insecure about.
100%.
So I would say there is a fine line between, yes, you're comfortable enough to talk about it and to educate yourself on it. But the moment we flip into the kind of finance bros that are in their Giles driving fast cars that they've rented, that's when it starts to shift into, oh, is this actually an insecurity? It's a very messy, confusing world, if I'm honest, the world of money, but it's very personal as well. And I think finding what suits you is the most important thing.
You said how emotions and beliefs and how we feel about money is actually one of the most important parts in how we manage money. I've read The Psychology of Money, and it's actually such an incredible book. And that's actually one of my favorite books because what's so interesting about that is he gives an example of how somebody who has zero experience with money, who has absolutely no education in it, can actually outperform somebody who's had years and years of experience, right? And I find it so, he's like, there's very few professions in the world that are like that. What do you think some of those emotions are towards money that are positive in us managing and building wealth? Because I think a lot of people who are probably listening to this right now are thinking, I perhaps don't even know how I feel about money, right? I don't know if this is a good thing or a bad thing. Like you've just said, talking about money is a good thing. But if you talk about money too much, it could be an insecurity. So people could be a bit confused right now as to thinking, what do my emotions tell me and how do I actually feel?
Genuinely taking a piece of paper or your journal and a pen and writing down the words that literally pop to mind when you think of money. That's it. I do this. So I teach finance in schools a lot, and I do this with pretty much every year group on the syllabus because I think it applies to everyone. And I say, write down words that you associate with money. And it's often very telling because your subconscious will kick in and you'll start writing. And it's the ones that write down things like, money's the root of all evil, or like negative or masculine, things like that, where it's very like negative and down, that have like the hardest time with it, versus people that go, it can buy me things, it gives me freedom, that kind of thing. A different outlook gives a different perspective for sure.
Yeah.
I think personally, as someone that's been in this space for a while, the people I trust the most with money are the ones that are calm about it. There's no, like you said, there's no polarizing. It's just, it is what it is. I use it to make my life better and make my life easier.
Energy, yeah. I think I love that as well. I mean, growing up, it's so interesting. I definitely had a very different perspective on money.
Okay.
And I think that a lot of people who are probably listening to this that maybe come from a similar background to me, my parents were immigrants that came to this country with really nothing. Sometimes those beliefs can be really hard to change, right? How does somebody who has perhaps grown up in an environment where they didn't have a lot of money change their beliefs around money?
Something that's going to be unpopular is you have to be aware of who you're around, because you are, and I know we will have spoken about this before, is like you are the sum of the people that you surround yourself with. And if the people that you surround yourself with are constantly saying negative things about money, you will be subconsciously hearing that all the time. And that's what you will be saying. Yeah. That's why it is hard to change the narrative from what your parents said. Because if you spend 18 years with them living at home, to then come out and be like, right, now I need to change my money mindset and correct everything they've told me, it's going to be really difficult and it's not going to happen overnight. And I think people think like fitness, that they can go to the gym once or they can think about money once and therefore it should be fixed. And
so true.
It's not going to be like that. It's actually going to take time, and you're going to pick up on things as they come up throughout your life. You're going to go, even down to tipping and things like that. People like, persona around whether they should tip or what they should tip. It can literally just come down to how you're brought up and what you're thinking about at the time and what other people around you do. Because more often, when you're at a dinner table, if the person next to you has tipped, you're going to tip.
Yes.
Versus if the person next to you hasn't tipped, you're not going to tip because you're going to go, oh, well, they know something I don't know. And therefore I'm going to, it's kind of herd mentality, isn't it? But that is a very simple term for everything finance-wise. If you are in a group of friends that are talking about investing and you've started investing, you're more likely to be an investor. Versus if you're in a group of friends where the moment money comes up, it's don't talk about that. Oh, money's rude. Or you can't ask for a pay rise. Like that's so rude.
Yeah.
You're going to be emulating those characteristics as well.
So true. I mean, it's so interesting actually, because when you speak to certain people, they never change their money narrative. And that is actually so true. If you've always grown up in a certain environment and you're always so fearful of money, it's very, very difficult to change that, right? That fear to have an abundant mindset. Do you think it's possible to change your mindset around money from being fear-based to having an abundant mindset around money?
Yes, I do. It just takes time. It takes time. It takes constant repetition. It's like going to the gym. You have to work on it every single day. Even the days where you feel like it's already done and you actually already start to feel abundant, you have to keep going.
Yeah.
I personally believe a lot of listening to manifestations, listening to what other people are talking about, absorbing as much education as you can, just doing a little bit every day. You don't need to go to the extreme like I do, where finance is my whole world, but you can take a little bit on each day so that it's just drip feeding. Because that's all that's happened to take you in the other direction. It's just the other direction of fear has been drip feeding of fear a little bit every day. And that's why you've ended up there. So we're just drip feeding back the other direction.
Yeah, of course. If someone's listening right now and they're feeling really overwhelmed, I mean, the cost of living is going up. People are really stretched right now. Where should they start?
I think the best place to start is, if you've really done nothing when it comes to your finances, is just a week of conscious spending. And then at the end of that week, looking back at what you've spent and being really honest with yourself, going through your bank statements of everything you spent that week and allocating each spend to something. So, in this week, what did I spend my money on and why? And just making yourself go through the list. You could do it on a piece of paper with a pen and being why did I spend this? What was it for? Is it a need or a want? And just having to kind of visibly see your spending is often one of the best ways to kind of kickstart the action to change. I think a lot, obviously now finance is so digital, we're just so quick to tap and forget all the little bits mount up. And so then we're not conscious about them. So yeah, it would be tracking your spending for a week would be the first thing I would do.
But how easy is it to kind of track your numbers without kind of triggering panic? Because a lot of people will say, sometimes I roughly know how much I spend, but if I keep checking it, I become obsessive. And then I become obsessive and then I become tight. And then I become very worried about, going over by £1 or £2 here and there.
Yeah, that's an internal battle for sure. And it's something that there is something to be said as well. And I think we should say this, is that when it comes to finances, like I said, it can be emotional, it can be psychological. And if there are deep-rooted psychological conversations you need to be having around money, obviously a therapist is a very great idea. I think everyone should have therapy, to be honest. And if it goes that deep, then a therapist can help you work through that. But from a finance point of view, I would say the reason I think it's a good idea is because, it might shock you and it might make you panic a little bit the first hour that you're going through it and you think, oh my God, this is awful, this is mortifying. But it is that kick that you need, because things aren't going to shift unless you do.
Yeah.
So I would say probably two parts of that is, one, if it gets very serious, please see a therapist and talk about it. And if you're seeing a therapist, bring up the money conversation, because it's usually, our fears and feelings around it are often deep rooted in our childhood, emotions and possible trauma. And therefore it's good to be aware of, versus, just from a finance perspective, do try it. Try going through your finances, but just don't. Yeah, it's hard for me to say don't let it overwhelm you, but try not to take it to the extreme.
Are there any other simple tools or frameworks that can help you get clearer about your finances?
So the budgeting frameworks, I suppose, is you've got ones like the 50-30-20 rule, where you can split your income into 50% goes into your necessities, 30% goes to your nice to haves, and 20% to your savings.
Right.
That is a very simple rule to basically allocating your spending. You've also got things like envelope budgeting, where you can put money in envelopes and every pound has a job. It's there's lots of nice ways to budget. There's lots of nice ways to manage your money. But personally, the one that always works is is intuitive budgeting. Like, what works for you? Are you someone that wants to organize all of your finances at the beginning of the month as soon as you get paid, and you want to give everything to its place and then you just spend what's left? Or are you someone that goes, right, I want to take all of that money out of my current account just so I have like barely anything left in there, and be really restrictive because I'm following the FIRE method, which is the financial independence, retire early. So you basically save loads because you want to retire early. Everyone's different. And I think finance has to mold with that. And that is that, like, half the challenge of writing my book was genuinely finding a manual that worked across all of the different types of people that I have come across, which lots of different types, and finding something that was just like the basics of finance that they needed to know.
But what's the best way you think there is to manage your money? How do you manage your money?
How do I manage my money? Well, I'm a bit of an, like, obviously I go through my bank statements every month and I like check where I've spent things. I also, because I work for myself, I pay myself in 2 different times of the month. So I don't get paid once a month, I get paid twice. And it helps me manage my money a bit better because I'm working on like 2-week rotations rather than 4 weeks. So yeah, things like that help me. I have specific pots for like fun money. I have specific pots for like future savings. I have lots of different pots and things like that. So I'm constantly moving it around. But yeah, it just depends on sometimes. And also something else I do say to my students when I teach them is the way I manage my money now is completely different to the way I managed my money 5 years ago. Because 5 years ago I was employed. I was being paid once a month. I was on lower income. I was, I had a mortgage 5 years ago. I now rent. It's just a personal choice. Lots of different things. And that is the way finances work. Life changes. So you don't always have to follow the same thing every year. If something stops working for you, change it up.
So you mentioned that you manage your money very differently when you're employed. For people who are employed right now, what's the best way for them to manage their money? To make sure that they're not overspending, to make sure that they are, I don't even know, how much money should you have in savings?
So they say when it comes to savings, you have like 3 to 6 months of emergency savings set up. So that's like 3 to 6 months of your absolute essentials to cover like rent, bills, food, etc. So yeah, having that in an easy access savings account is the standard. That's for employed people. I personally shift that to 6 to 12 if you're self-employed. But yeah, as an employed person, it's just about keeping track. If you genuinely feel like the biggest barrier in your life is your lack of money, then you need to find new ways to earn more money. There's no way to budget yourself into more income. Like, there just isn't. If you think that the biggest problem that you have is the lack of income, then you need to increase your income or basically reduce your outgoings. And if you're someone that says, I've reduced my outgoings to the absolute bare minimum, then the only other way is that. So yeah, it's a very difficult conversation that often people have to have with themselves, and has to be very honest.
It's very difficult though to just say, just increase your income.
Oh, 100%.
Isn't it? It's like some people are like, I'm working literally 9 to 9. Yeah. Like 3 jobs.
Yeah.
And I can't do it.
The facts are, it isn't easy. So you've got like your options are, which like a lot of people obviously have taken up, like side gigs and side hustles. And then you've got asking for pay rises. So like making sure that you are hot on who you are and how you matter at your business, and why the next time that conversation comes around, you are entitled to a pay rise, as opposed to kind of questioning whether you could get one. And then third is just leveling yourself up in your career as well. I think often people wait for management or other employers, like other people within their employment, to say like, oh, this is what you could do to be better. Yeah. Sometimes it might just be a case of you could do an extra qualification that then puts you into a completely different bracket.
Got it.
And I think a lot of young people specifically as well don't often realize that these things are possible.
You mentioned you used to have a mortgage and now you rent. Talk to me about that. Why would you go from having a mortgage to renting? Because I don't know about you, but all I'm ever told is you need to buy a house, you need to be secure. That shows that you have wealth. I mean, my partner and I, we don't have a house. We're renting. And both of our parents were mortified when we told them that. They were like, this is the craziest thing. We were the first people in our family to do that. Everyone was like, you're wasting all of your money. And our perspective was, we want to live in central London. We don't also know where we want to live for the next 5 years. We might want to move abroad. So if we buy a property in central London, one, we won't be able to buy a property that's like comfortable for us to live in right now. And two, we might have to sell it within the next 2 years, which will make us lose money. But still in people's head is we've thrown money down the drain. Do you think that's a poor financial decision to rent?
No.
Why?
Because it comes down to what safety looks like for you and also what financial security looks like for you. For me, I had a personal life change, which I won't go into, but I went from owning with someone else and then being bought out because I was no longer with them. So I through life, decided to go back into renting. I could have probably decided to buy with like my deposit and my salary, but I didn't because I had a very similar situation to you where I looked at my life and I thought, well, in a few years, I might want to be in New York. I might want to fly. I might just want to travel a lot more than I do because I am in a job where I have a lot more kind of, I don't want to say freedom because I don't really have a lot of freedom, but I do have like the freedom of movement. Like I can technically do my job from most locations.
Yeah.
So I just looked at myself and I was like, well, I don't think I want to own somewhere that fixes me in a location. I want to rent. And also the responsibility just halves when you rent. Like if my hob breaks, which it did the other day, it's not my problem.
Yeah.
I literally contact my landlord and I'm like, this is your problem now.
So true.
And they have to fix it. Whereas if it was mine, I'd have to go through all of that drama, deciding what I wanted to replace it with. And no. So for me, in my period of life right now, it makes complete sense for me. And I have the same problem where lots of people go, but you talk about finance, so therefore you should have a mortgage. And yeah, I could get one if I wanted one. But in my stage right now, it doesn't make sense for me financially. I've done the numbers. Financially, if you compare the numbers, it doesn't make sense. But I am not saying that buying is wrong at all because I've owned before. I know people that have owned. And if you are going to buy, and sometimes, especially if you're buying sort of outside of London, buying something, doing it up and then spending a lot of time in it, you can still see returns in owning homes. You can. Like, there's no question about it. But the one thing I think that our parents' generation forget is we aren't seeing the same returns that they saw in their generation. Yeah. You know, my mum was able to buy a flat on her own at a very young age as a hairdresser in London. In what world would that happen now?
Mad.
You know, I spoke to a doctor the other day and he was saying his dad is also a doctor. And when his dad was a doctor, he was able, on that first doctor salary, to buy a flat in Chelsea. In what exactly? And now his son is a doctor on the same salary. It's laughable to even think that salary would even come close to be able to getting you a mortgage.
Well, you can pay your rent.
Exactly. So this is the thing I think most people forget is the changeover. And that's why people's mindsets of our parents' generation think property is a surefire investment because in their generation, it did see huge returns, like astronomical returns. And it's because we went through that period, you know, the boomers went through the period where the government was selling off properties. And so properties were cheaper. And, you know, there was this influx of supply. Whereas now there is hardly any supply, especially in London. Tons of demand, wage prices flying all over the place. And therefore for many, it doesn't make sense, but it comes down to personal choice.
Do you think that if you started a family and you have children that you should buy property for security? Because a lot of people say, if you're renting, someone can just kick you out. Because there's so many people now that say you should just rent instead of buying. And I think that's a objection that a lot of people say is, but I have a family and so I can't just rent and hop from place to place, but I also can't afford to buy. So what on earth do I do?
Yeah. Again, I think it comes back to what I said, which is it depends what security looks like to you because there are long-term lets, you know, and I have friends that have babies now and where they live probably won't work in 3 years' time. But it works now because their baby is tiny. Yeah. And then once their baby grows up a little bit, it's still just like this big and then this big.
So true.
But, you know, in 3 years' time, 5 years' time, 10 years' time, that flat they live in, if they own it, is no longer going to work. And so they're going to have to move anyway. So I would say there is...
That's so
and
true.
there's lots of renter security as well now. Like, you know, it shouldn't be possible for landlords to just open their door and be like, you need to leave right now. Like that really shouldn't be possible anymore.
Okay.
I know it's not always a nice world. Things do happen. But I would say it's very much, you can still rent and be secure. But if buying is the most important thing to you, then that's where your values are. And that's absolutely fine. And that's what you'll be saving towards. For me, I have different values right now.
And what are those values?
Ooh. For me right now, it's loving my job and having freedom.
Yeah.
And having money to be able to do whatever I want when I want. Having, like, I worked as an accountant for 7 years. I'm working this out the other day. And I worked as a management accountant and I loved my job, but my job meant that the first week of every month, the first month of every year and August of every year, I basically wasn't ever allowed to take holiday because those were like key times for management accountants where you had to be in. And I was constantly being told, no, you can't have holiday then. Oh no, you can't go away then. No, you can't do that then because you were restricted by your employer. And for me, when it came to what did finance mean to me, I was like, finance for me meant freedom. Yeah. I wanted to be able to turn around and be like, right, this is when I'm going to work. This is what I want to do. And that was what it meant for me. And that's what it means for me currently. I am a single gal that lives in London. So I don't need to worry about nappies or husbands right now. And so I can have this like luxury of time. And I do say this because people ask me on social media, like, how do you do everything? And I'm like, genuinely, I have a lot of freedom because I don't have any dependents.
Yeah,
and I don't think that's said enough because I think it should be the women that do have dependents really should be knighted. Like my friends I know in this space that do what I do on social media and have children and a husband, I'm like, hats off to you.
Yeah, it's hard.
Because no one, I can get up, get out of my bed, and just go to the gym.
Yeah,
no one
so
cares.
True.
It's delightful.
So it is delightful.
Whereas so many girls in my life, or women, sorry, I know they get up and the first thing they see is their child and then their husband and then there's pressures. And I think, how do you do that and then do this?
It's really difficult actually, and it's really interesting. I live with my partner now and we didn't live together for, like, I lived by myself for a year and a half before I lived with him. And when I lived with him, I really noticed my productivity go down and I never thought it would, right? And it's just the smallest of things. Like, you want to do nice things for them. You want to make a nice dinner. You have to talk about like your day. And like, because you wouldn't walk in and just ignore each other. And that's not, I'm not saying these are bad things. I'm just saying that that's just with one person. And then when you have a family, you both have to talk about what the kids did that day and the schools and whatever. And you just forget how hard it is for working mums to be pushing themselves and growing themselves. Sometimes I just feel so tired even thinking about it. I'm like, I don't know if I'm going to be able to do it. Honestly, I'm so tired all the flipping time. I don't know how I'm going to do it. But it's really interesting. I think the dependency point is a really, really strong point. You talk so much around investing, and I hear a lot of people talking around investing. What is the easiest way to start investing if you have absolutely no idea where to begin?
It's to find an investment platform that you like. There are many on offer, from Trading 212 all the way through to Hargreaves Lansdown. Hargreaves Lansdown is one of those like ones that you've probably heard of. It's been around for a very long time. Yeah, Trading 212 is one of the newer ones. They are a bit more innovative, lower fees, but they provide the same service when it comes down to it, really. With Trading 212, you can start up an account. You choose between a general investment account or an ISA. ISA has the tax-free wrapper, but it has a 20K limit on it. The general investment account, no limit, but you might have to pay tax. That's the simplest way of explaining that. Then when you're looking at what you want to put in, you want to look at your own income and think, how much of a percentage of my income can I put away each month that I'm okay with? And then I personally would set up that as an automatic transfer every month. So it's going in. You're investing for the first time, you want to be diversifying. So what that means, not to quote Love Island, but you're not putting all your eggs in one basket being a business, you're putting eggs in all the baskets. So you want to look at indexes, which tracks multiple businesses. The most common and the most, well, I'm not sure if this is the most, but probably up there, is the S&P 500. That's the top 500 companies in the US. If you basically purchase an ETF or an index of that S&P 500, you are investing in a little portion of all of those top 500 companies.
Yeah.
Put your money in there, leave it. That's it. You don't touch it. And you give yourself time. So they say a minimum of 5 years when it comes to investing to monitor your risk. By you've got to 10 and plus years, you're starting to like very much reduce that risk of any like issues and loss. Yeah. But yeah, and that's if you're like very new to it, you don't know what to do, you just leave it alone. Please don't check it. Don't feel like you need to go in and buy individual stocks. You don't need to be beating the market. It's just time. It's time in the market is what you need. So yeah, starting and leaving and setting up an automation that goes into that investment every single month and that's just rolling.
How much would you make if you left £10,000 in there over 10 years?
Gosh, it's hard to say. If you're saying in the S&P 500, on average, they're saying the returns are around 7 to 8% a year.
Per year?
Yeah. So,
okay.
Yeah.
And explain the tax element of that to me. So I put £10,000 in,
yeah,
get 7 to 8% of that. Do I get taxed on that, 7 to 8%?
If you are in a ISA, if your £10,000 is in an ISA, that 7 or 8% return, no tax whatsoever. That is the beauty of an individual savings account.
Got it.
If it's in a general investment account, it is taxable. If it falls below your allowances, you do have a dividend allowance and a capital gains allowance. So if it increases, you wouldn't have to pay tax if it still falls beneath that. But if it goes above, then yes, in theory, you would have to pay tax, but only once you took the money out.
How would I know what my savings or capital gains or dividends tax is?
Allowance. So the allowance for those, currently the dividend allowance is around £500 a year.
That's not a lot, yeah.
No, it's massively reduced. Capital gains tax used to be 12.5, it's now 3. That's taken a huge hit.
Wow.
And savings allowance, it actually varies dependent on your income. So if you are a basic rate, you have 1,000, higher rate 500. If you're an additional rate taxpayer, you have no savings allowance.
Everything you're telling me, right, is this has been reduced, taxes are going up, interest rates are going up, inflation's going up, whatever on earth. Why are all these things happening in the UK right now?
Okay, so allowances have come down. Taxes haven't necessarily gone up, but they feel like they have because of something called fiscal drag, where basically the allowances that we were talking about that have come down or stayed the same haven't been going up in line with inflation or our earnings. So what you're seeing, so for instance, we have something called personal allowance, so 12,570 of income before we start paying tax. And that hasn't moved in a long time, but our income has. Yeah. And there was a stat the other day that said if it had risen with our wages, it would be more like 27,000. And therefore, we feel like we're paying more tax because in theory, we actually are because we're earning more and therefore we're paying more of our income in tax. Why is it all happening? Honestly, there are so many factors involved. Obviously, we had COVID. We had COVID where we effectively printed money to pay for furlough. And unfortunately, I don't think, again, it's because we don't teach this stuff at school and economics isn't really taught unless you voluntarily go and choose it. You don't really get taught that printing money means that we will have inflation.
Correct.
And inflation means that the price of things will go up, things will become more expensive, it will be harder to purchase with the money that we have right now. That is very, very difficult to bring back down. So then institutions like the Bank of England have to step in and make decisions like, right, well, we're going to increase the interest rates that we've got so that we can bring down inflation to calm this system so that prices don't just spiral out of control and we get hyperinflation.
Hold on. Explain that to me as if I'm a 3-year-old.
Yeah. So, right. You want to buy something, you want to buy a bag and it's £10 and this year it's worth £10. Next year, if like the cost of producing that bag, the demand to that bag has gone up, etc., it might be worth £12. So therefore your £10 from this year is not going to buy you the bag because it's going to cost more.
Yeah.
So to stop this spiraling, basically what they want you to do is they want to stop us from spending to reduce the demand for that bag effectively.
Okay, right.
And to do that, the Bank of England, who is our central bank in the UK, increases interest rates so that basically it's less favorable for us to spend and more favorable for us to save. Does that make sort of sense?
Yes. If we decrease the demand, are we not increasing the supply?
Well, but then if you increase the supply, the value of that item is going to drop, isn't it?
Yeah.
Yeah. So that's what they're trying to get to happen. So what we're trying to do is bring that. So instead of that bag jumping from 10 to 12, they're trying to get it to only increase by £10 and 20p, basically.
Yeah.
And so they're trying to increase interest rates to bring down the value of these items. But what happens here is that if you're one of those people, especially before COVID, that was getting a mortgage for 0.25%, maybe that's a bit low, 1.25%, you're then coming out of COVID where they've had to increase all these interest rates and suddenly your nice 1% interest on your mortgage is now 4 or 5%. That is the difference of like thousands of pounds a month.
Mad.
And people don't realize that that has to happen to bring this down. And so that's one institution. So you've got the Bank of England. And then the other institution that impacts our finances is the Treasury, or we know better as number 11 Downing Street, our Chancellor.
Yeah.
That has to make financial decisions on our behalf effectively to help keep economic growth. So help help the country still continue to grow. And that's when you have things like budgets and statements where the Chancellor will stand up and say, right, we're going to have to change this tax. We're going to have to reduce this allowance, things like that. And it's all because they need to find money to pay for services. So whereas the Bank of England's sole kind of mission is to kind of keep that inflation rate down at like 2%, what the government is more bothered about is how is it going to fund things like the NHS, the police, the services, all of the stuff that comes from the state. And they can't do that unless there is money coming in, and the money comes in through us, through our taxes. We have huge amounts of money going out of the government for things like state pension, for the NHS and things like that. I'm not against it at all, but again, I don't think people quite realise £1 in £10, £1 in £10 that the government spends is actually just paying off interest on loans that they take out to pay for all of these things. So as those interest rates rises, the government's interest rate rises as well. Exactly. So as the interest rate starts to come back down, it's great for the government because they go, phew, okay, we can calm down. Our interest rates dropped a bit. But yeah, £1 in £10 the government spends goes on interest on a loan.
What are the other pounds spent on?
Well, obviously, like I said, you've got state pension, you've got NHS, police, the government themselves, services. There is so much that we pay for that I think people forget comes out of our taxes. When I do this conversation with my year 4 kids, I go, right, what do our taxes pay for? And suddenly the conversation sparks and they're listing all these things. And I go, so remind me again why you guys don't want to pay for this. And then it's a quite healthy debate, especially with a year 4 group, because they go, okay, yeah, well, I do think that the NHS should be paid for. And I'm like, yeah, okay. So if you don't want to pay taxes, how are we going to do that? And that's where the conversation sparks. But we could sit here for another 5 hours talking about this, because actually then it comes into conversation should you pay based on what you earn? Should you it's a very difficult conversation. And, even if you look at the state pension in isolation, it's a huge amount of money that comes out of the government. And it's because we're all living longer, which is wonderful, but we haven't shifted the retirement age as quickly as we're living longer. But our older generation do believe that they are fully entitled to the state pension. And if you've hit the criteria to get the state pension, you are entitled. So it's 35 full years of national insurance contribution. So you've basically worked for 35 full years. It doesn't have to be consecutive. You are entitled to take the state pension. And so it doesn't matter whether you are a billionaire or making no income. You are entitled to take the state pension if you have earned it.
How much is the state pension?
That's off the top of my head. I think it's around 165 a week. It's not a lot. It's underneath the personal allowance at the moment. Yeah. So if you are someone that has no other income, it is your life, it's literally your sole income. It's a lifeline. But we also have to pay it out to the millionaire down the road that doesn't really need it and probably uses it for his
pocket change.
Yeah.
But hold on, this is an interesting one actually. Mm-hmm. Why should they not be entitled to it? Because they've paid their tax.
Well, exactly.
And they've worked hard. Yeah. And people are going to hate me for saying this. I'm just giving you an alternative perspective.
Yeah.
But they've worked really hard to get that money. Mm-hmm. They had to pay a higher tax in this country. And now people are judging them for taking the state pension.
That is the age-old question. This is why wealth tax is talked about so much at the moment. Because
what are your thoughts on wealth tax?
Should there be a wealth tax? I think it is. I think it's important that we are having these conversations because, yes, the wealth inequality is getting out of control. And COVID was a big player in that. I'm not sure if you heard the Gary Stevenson's Diary of a CEO podcast.
Loved it.
Yeah, it was brilliant. And he made it clear as well that COVID was a huge part of that because basically all of the wealthy people had to stay indoors and all of their assets suddenly became massive and there wasn't many expenses and it just got bigger and bigger. So yes, it is a huge wealth inequality problem. That is a fact. But wealth taxes, it's so difficult because, then the conversation comes up, well, we have freedom of movement. So if you're that wealthy, you just leave.
Yeah.
And then you're not paying tax in this country at all. And then it's complete fast. So I think there are some ways of fixing this. I think one, businesses shouldn't be allowed to like businesses like Amazon and like massive companies that basically pay no tax because they claim that their residency is in other countries where there's no tax to pay. I don't think that should be allowed.
Yeah, agree.
I think that's wildly unfair.
Agree.
And I think, do I think we should be taxing like workers? So like people that have worked really hard for their money and they're just trying to make a living? No. So yeah, the only one I can come out with at the moment is taxing more wealth. So understanding, you know, the inheritance tax is there as a redistribution of wealth, you know, understanding what it's there for and, you know, does it need to be adapted? Does it need to be changed so that we actually make more money out of it, but harm less, like fewer people?
I want to talk to you about inheritance tax. Okay, and I want to give you an example. Let's say somebody has grown up, I don't know, on a council estate, and they barely had any money, or somebody who's had very, very low income, and they worked really, really, really hard. You know, they got very lucky in some elements. You know, they got a scholarship in school, they got a scholarship in university because they were really dedicated. They then got a really good job, and they worked their arse off. They have now paid their tax, their national insurance for 75 years, however old they are, and they're 60 years old, and they're sitting at home, and they're thinking, I want to now give this property worth £2 million over to my son or daughter. And I now have to pay 40% tax on it.
Well,
why is it fair?
They don't have to pay 40% tax on it, do they? Because inheritance tax, yes, is on the person inheriting the estate. So
Still.
The reason I understand, so I'll come at it from my accountancy head.
Yeah.
As an accountant, I'll tell you why it exists. And then I'll tell you a little bit of how it sort of can be adjusted. So why it exists is it is genuinely a tax to redistribute wealth. It was to stop people just buying up loads of things and then transferring it to their son, who could then transfer it to their son, and it just stays within a family.
Got it.
The idea behind it originally was to tax the ultra wealthy because the thresholds are actually, used to be very high. So if you had that sort of wealth, they were basically just saying, right, you need to distribute some of this back to the government so we can use it to pay for services.
But why is that fair? Hold on. If we think about it, like from the root of it, right? If we think about it genuinely, and this is such a philosophical debate, I guess, because where do you start? Like, who got the money to pay for the giant thing? Right, like the giant house. Let's just say it's a £10 million house. If we go back and back and back and back, who originally had the money to pay for that? And you know, who made it, you know, how does anyone ever escape then and whatever? But if you actually think about it, if someone did just get really lucky and they bought a £10 million house and they passed it on continuously, so what?
Well,
because if they don't, then why does the government get it?
Well, so we're going down a philosophical route here because you could then say, well, why does anything belong to anyone?
Yeah, why does it?
But that's the thing is, so why does the £10 million house belong to the guy that worked really hard? And why should he be entitled to just hand it to his son that didn't work for that? Should it not be a case of, right, we need to distribute some of that wealth back to the government so that they can help support the system that pays for like the NHS and the police system and things like that? I'm not saying I think
the problem is they don't. NHS workers are not working. Police are getting cuts are happening. Disability allowance is going. I think that's the crux of it, isn't it?
That's the visuals. Like that's what people visibly see.
It seems like in the UK, you're penalised for your success. Do you think that's true? That's how it comes across. The more you grow, the more you're taxed. The more you're taxed, the more you're judged on later on for using the services that you're paying for, like the NHS or like the state pension.
Yeah. I think there needs to be more support for young entrepreneurs for sure, because I do think that they are being put off from achieving what they want to achieve because
100%.
There isn't enough support for them, as in comparison to other countries in the world that are offering, like Portugal offer these like golden visas because they want more entrepreneurship, they have lower rates, so therefore people are setting up abroad. Versus, do I think it's penalising like millionaires? It's hard to say. I'm not a millionaire right now.
No, neither am I.
So
I'm just arguing on the other side, everyone. Everyone's going to be like, you're so rich. Whenever I do this and I talk about it, people are like, you're so rich. I'm like, I'm literally not. I'm just giving a different perspective because I think it's important to talk about the other side as well because there's a conversation to be had on both fronts. Because I definitely do feel though, you know, I don't pay myself a massive salary, but if I was to, I would feel, you know, if I was to live here would I be penalized massively for that? Because I'd be giving most of it away to the tax man. And I think when I was employed, I didn't look at it like that because I never really saw. But now when I want to give myself something, I'm like, oh my God, like, because you're working so hard and you're not even having that much. And also I think the difference is, it's like, if the visuals weren't, money's being thrown down the drain. We were talking about this before, how unsafe it's become in the UK. The police don't even bother turning up. You know, I've had situations where ambulances have taken an hour and a half to come to see people I love, or things have been messed up in hospitals in the NHS, and people have lost their loved ones. So I 100% get what you're saying. Every experience is subjective. But when you're seeing doctors who are earning like next to nothing working in the NHS,
I don't agree with.
I just don't understand it. That is one thing that will blow my mind forever, is why doctors don't get paid anything. When you see that and you see we're paying this much tax, you think, where on earth is it going?
That's why there needs to be more visibility. It's why
100%.
I've worked with the institutions for a little while now. And genuinely, every time I go in, all I say to them is, I'm like, you just need to be better at explaining what you're doing. Because the problem is they don't explain themselves, because years gone by, they didn't have to explain themselves because we just accepted it. Well, not we, the previous generations just accepted it. Whereas now, like, you must start explaining yourself and what you're doing, because our generation won't put up with it anymore.
They don't.
And we're having these conversations where someone says, where does it go? Well, I can show you where all that money goes. And like, and I think sometimes, you know, I agree that our doctors aren't paid enough. They should all be knighted. Our teachers should be paid more. We'd get better teachers. But then also there's a case to be said sometimes that, you know, even the MPs aren't paid very well. And therefore we end up choosing out of a pool where they have enough income already to therefore supplement the lower income they get as MPs. And therefore you're going to end up with MPs that don't represent society. Because if you were intelligent enough, you just go and get a slightly different job that paid you a lot more money, and you wouldn't probably be sat in government. So there's lots of conversations that need to be had. And I think the education system has a lot to answer for, because our education system hasn't changed in hundreds of years. It's still set up for factory workers. It's still set up where we all face a teacher. And that was because years gone by, in a factory, you all faced your, like, the manager or like the officer in charge. You know, we study maths, English and science because they were the basics that you needed to work in a factory. You know, the 9 to 4 element, or I'm not sure what like school times are anymore, but like that 9 to 4 element was because those were the working hours you'd work in a factory. Like even down to like lunch breaks was all because that's when you had to have a lot of lunch breaks, things like that. There's lots of things that just haven't changed in so long that we're forgetting about, that could actually have huge knock-on impacts. You know, if we were changed up the curriculum, maybe we'd be educating our next generation slightly differently and better to work in this new world.
I really want to actually pick your brain a bit more on the inheritance tax, because I know a lot of people that are watching this probably, you know, with parents who are at an older age. What should they do? Like, if my parents are around 60 to 70 years old, should I start thinking about inheritance tax right now? And what are the steps that I need to take?
So inheritance tax is a 40% rate on anything you have in the estate over the threshold when they're dead. So you have things like spousal transfer. So for instance, if we're just talking about a married couple, so you're talking about your mum and your dad, if your dad passed and your mum carried on, everything can pass to your mum completely tax-free, including his allowance, which is 325,000. It's called like a nil rate band. And then if you have a home within that estate, there's an extra 175,000 allowance as well. So let's say there's a home in the estate of this couple. That 500, so everything that he owns can go straight to his wife, including his 500,000.
Got it.
She then continues to live, but let's say a year later, she dies. What happens to the kids of this couple that we're made up is they have inherited, let's say they inherited £1.5 million in the estate. And that's made up of a property, cash, assets, etc. The 40% would only be on the 500,000, because there would be a £1 million allowance, 500 from the dad, 500 from the mum. That makes a £1 million allowance. And then they'd only pay 40% on the 500,000 because there was 1.5 million in the estate. But
hold on, I'm confused. Why am I confused? So there's 2 kids, me and you.
Yeah.
There's 1.5 million in the estate.
Yeah, from our parents.
They're both allowed a £500,000 allowance each.
Yeah. So therefore, there's only 500 grand in the estate that's taxable. And that's taxed at 40%. So Obviously, you're taking 40% of 500,000. The other big issue for many people is that tax and the probate is due very quickly. It's actually within like 6 to 9 months. Like I know. And that's the worst part about inheritance tax, personally, in my opinion, is how rapid these, like the finances
why
have
is
to
it so
be done.
quickly?
It's a great question. Not sure. It just has to, and they won't release probate to be able to sell properties until you've like sorted this all out. So it can actually, it's I think one of the worst parts I think about inheritance tax is that speed at which all this stuff has to happen, because you haven't been able to grieve. You can't. Like, there isn't enough time to be able to go through grief to then be forced to do all these finances.
If both my parents die and they leave me 1.5 million pounds, just me, and let's just say me and my brother, 1.5 million, let's say £1 million of that's in property and £500,000 of that is in cash.
In cash, yeah.
Right. How much do I get?
So effectively, you get 1.5 of it, but you will then also be getting a tax bill from HMRC for 40% of 500,000.
Okay.
However you want to pay that, it's up to you. If HMRC can see that you've got 500,000 in cash, they will expect that to come out of that amount.
Yes, but if I don't,
some of the problems that people run into, and I get messages about a lot, is if that 1.5 million is entirely wrapped up in a house and there is no cash assets whatsoever, what do you do?
So what do you do?
Well, this is the thing. You've got options. Obviously, the one option is that you sell the property, but then it becomes this like tit and tat situation, because you can't sell the property without probate, and you can't get probate until you've sorted the inheritance tax.
Wait. What? So if we're all living in this house together and I do not have anywhere else to go, and let's just say my parents bought the property for like £100,000, now the property's worth 1.5 million.
That's the biggest problem, yeah.
You're telling me I can't sell the house without probate, which is paying the tax off?
If you don't have only ownership of the property, if they owned it and you didn't, but the other option is that you can basically say to HMRC, I can't afford to pay this right now, and they can split it in installments and say, right, will you pay for it over a long period of time, and then once you've sold the property, you can then pay them back. I know I'm not saying it's a great system. I'm telling you as an accountant how it works.
Oh my God. That is deluded. If
full exams on it.
Imagine if you're kids and you're like 19 and you lose both your parents and you're living at home, and then HMRC are now saying you need to sell this family home. You have absolutely zero income, but now you need to pay the tax on both what your parents had. And they just got lucky, by the way, because like 20 years ago, they bought this property for like 15K and now the property's worth like 1.5 or whatever it is.
That is the biggest problem we're seeing, is that property values are rising way faster and the allowances have been frozen for years and years and years. That is the problem. The solution is obviously things like you can say I can't afford to pay it. Like, this is how I can afford to pay.
What if you can't though? What if 19 you don't have a job?
Yeah,
what happens at that point though?
You would hope that things would step in to protect them. I can't weigh in on a personal circumstance, but I would say, you just look and ask for support. But yeah, the inheritance tax system, I've done many, many exams on it, and it does need revision.
I'm not gonna lie, I feel a bit overwhelmed right now.
Yeah, that's absolutely fair. Finance is quite overwhelming sometimes.
On earth can I do to make sure that I'm setting myself up for success for the next 5 to 10 years? Because I mean, all of this sounds really bloody scary to me.
So financial success, like I said, looks different to everyone. But I would say look at your future self. So think about things like your pension. If you are employed, your workplace pension is one of those Brucey bonuses that we all forget about. Your employer has to contribute if you contribute. So
is it a bonus though? Sorry to interrupt you. Or is it a bit of a scam?
What, the workplace pension?
One of my friends thinks it's the biggest scam in the world.
Why?
Because, and I called him today and I asked him, he said that all a pension is doing for you
is investing on your behalf.
And if you put your money into the S&P 500, you can make all of that money plus more than what the state pension has given you. Now, he said the other thing will be the employer will give you double or an amount. And he's saying, if you also research a little bit into investing a little bit more, you can invest in yourself, starting a business, or in more of these stocks and shares. Now, I was like, that's really risky. I might as well just do a podcast with myself here, by the way. Sorry, I'm just like giving all the back and forth. And I said, that's really risky. And he was like, the thing is like, because we're not taught about it, we're kind of taught to fear it. But a pension is actually one of the most craziest things that people do, in his opinion, because he said, we're basically told to save up for the future. And with the rise of inflation, the money that we're putting in right now could actually get us a lot further if we invested it in ourselves or like in a business or something that we want, rather than just giving it to our employer who's saying, I'm going to double it.
Yeah. So obviously I was saying to you before when you were like, how can we increase our income? I agree. Yeah. So I do agree a slight, I'm half and half with your friend. So I'm half in the sense of, invest in yourself 100%. Don't be holding yourself back. But the other camp is understanding that your pension, so the workplace pension is an auto-enrollment scheme in the UK. If you contribute, your employer has to also contribute. And some of them will match it. And it's contributions that if you turn away from and you go, I'm not putting anything in, your employer doesn't have to either. They don't have to pay you that in any other way. They just don't put in. So that's the only reason that I would say your friend is not necessarily entirely correct, is that if you don't, yes, the pension is an investment. You can also choose where your pension gets invested, by the way. You don't have to go with what the standard fund is. You can make a conscious decision to go in and be like, this is where I want my money invested. So it's not all or nothing, I think. But I do understand where people sat in the camp where they're like, I want to invest it myself and invest in myself. Absolutely fine. Crack on. Yeah. But if you are employed, don't opt out of the pension and then do nothing else. Because that's what I see a lot. People go, no, I want the money now. And I'm like, yeah, but if you're just going to spend that £60 now on going out.
So true.
What would have been better this month would have been to put that in a pension, because your employer would have also probably had to put in £60. And that's going into a pot to future you, which future you will be thankful for. Because if you opt out now, you get to retirement. You go, well, where's my retirement pot? And everyone goes, well, I've been putting into my work one. What were you doing?
So
and they went, oh, well, I went out in 1970 and had a great time. Oh, okay. Well, we're 2025 now. What are you going to do?
Yeah, so true.
And that's the problem. So it's down to personal choice. I am self-employed. I work for myself. I have a slightly different pension setup. My employer is me. I don't match my pension contributions in that same way that my old workplace did. It's very different. But yeah, if I was back in a workplace environment, I would 100% be like, give me my money.
So you'd opt in for a pension?
Yeah, I would, personally.
What other tips and tricks would you tell people to opt in for or take advantage of that we perhaps don't know?
I'm all about the education. Never tell anyone. I never say you should or shouldn't do this. And I think finance creators that do say you should is worrying, because everyone is so different. But yeah, future self, F you money. Let's try not to swear.
What's that?
So F money, being able to leave. Having an emergency fund pot is one thing, but having money that basically gives you the ability to leave a situation you're not happy with, it's really, really important. And as a woman, I think it's even more important. Having a savings pot that is specifically there to help you leave a relationship, leave a job, leave family that you don't want to be with anymore, that is important. And even if you think that you're very deeply happy and you're very comfortable, still saving into that pot and just reminding yourself that it's there. Because if at any point your brain goes, actually, I'm not appreciated here by anyone, whether it's your family, your friends, or your partner, or your work, having that money to go, no, do you know what? I'll be fine for 3 months to figure this all out on my own. The freedom it gives you is so important. So yeah, having an FU pot as well as an emergency fund pot, because emergency fund pot is meant for things like the fridge breaks down, or the car breaks down, things like that. But an FU pot goes, I just don't have to live like this. I can just leave. And that's, I think, honestly, one of the freeing things about money. And then the old classic, and you can go on pretty much, I've got every other reel is me talking about this, but pay slips and tax codes, just taking control of understanding your income. A lot of people just will constantly tell me that they've never checked their pay slip, and that worries me because...
I'd also never check my pay slip.
Well, that worries me because there's so much that can go wrong on it. No one knows unless they check on it. So in the book, I've got a whole chapter on it. Things like your tax code, things like understanding your student loan coming out of it. There's an actual pay slip in there that you can literally refer to. Yeah. There's part of it, yeah. And understanding that your tax code means how much income you earn before you pay tax, all these things, so important. So yeah, financial freedom is all about just getting to grips with the minute stuff, like your pay slip, all the way through to the big stuff, like how much wealth you'll have when you're retired.
It's really interesting. I think a lot of people feel so overwhelmed by money because it's just so taboo sometimes as well to talk about it, especially for women. But I really love that tip that you've just said as well, to have this kind of F money and have a little pot, even if you're happy and you're secure and everything's going okay. I'm getting married in 4 days.
Oh, congratulations.
So tell me some of the tax benefits of getting married, because I think some people sometimes, well, I have no idea.
Yeah.
I'm not doing it for that reason, clearly. But some people, do they get married for tax reasons?
Well, you can do. So one is obviously we've talked about already with inheritance tax. You can do a spousal transfer. So it means you can inherit anything. Also, something to be aware of is that when you're married, any wills you've written before are superseded by your marriage. So therefore,
meaning
that when you are married, you and your partner are entitled to each other's things.
Oh, all of it?
Mm-hmm. Unless you've written something different. Yeah.
Oh.
So that's why it's important. Like once you're married, you
to
might
write a will.
Rewrite a will if there's specific things you want different.
Got it.
Because a lot of people forget and then don't realize that their marriage supersedes their original will.
That is mad. So hold on. Let's say, for example, you didn't have a will, and then you get married, and you're separated from your partner. You're not divorced yet. You're separated, and you've got to write a will. Everything goes to them.
Yep.
It's a right nightmare, isn't it? Okay, so write your wills, everyone.
Yep.
Okay.
Second thing that comes to mind is a marriage allowance. So it's mainly for basic income taxpayers. So if you're in that up to 50,270 bracket gross income, you can transfer 10% of your marriage allowance to your spouse to reduce down their taxable income if you're not using your personal allowance. It's a very niche piece of tax law.
Interesting.
Again, I talk about it in the book, but it's a niche thing, but it is a tax break. And then, I would say it's probably those two are the biggest ones. It's the marriage allowance and the tax on inheritance tax. It's like the biggest ones. There used to be more, I think, marriage allowance or marriage tax breaks, but they've been removed.
What are your thoughts on prenups?
Well, I actually have many, many girlfriends in my life that are going through this conversation right now. I've got friends that have done it, friends that haven't. So apparently what I've been told, I'm not a professional in this in any capacity. I've been told that obviously technically prenups are not legally binding in the UK.
Yeah, I've been told that as well.
Yeah, so they are favourable to have, and they almost create like this contract as if something was to happen, this is what would follow. And like legal teams can look at them in the situation, but they're not legally binding like they are in other countries like the US, I think.
Okay.
But I do think it's important. You know, women more than ever are really stepping into their income and their earnings and their potential within themselves and have businesses and things they need to protect, you know. And I think, you know, you might be going into the business with, you might be going into the relationship, sorry, not the business, going into the relationship with very different assets at the time.
Yeah.
You might want to protect things.
Yeah.
And, you know, even from a business point of view, you know, as a woman with a business, you may think, actually, I need to protect my business because let's just say that your business had other people in it. They might say to you, well, we'd like you to protect your business because we don't want him to take your role if you die.
Yes.
So that's something important. But yeah, the other thing I've heard about prenups as well is they have to be written and signed 4 weeks before you get married. So
really?
If you haven't done one now, then don't worry about it.
It's a really
you can
interesting,
do post-nups, I think.
Yeah, you can. It's a really interesting thing, actually, a prenup, because like you said, money is very emotional.
Yeah.
Right? I actually think it makes 100% total sense.
Mm-hmm.
I'm not offended by that. There's a lot of women that would be offended if their partner came to them and said, I want you to sign a prenup.
Mm.
And I think it's because a lot of women have this narrative in the movies and social media that they're gold diggers. And now there's this whole thing on social media that I'm seeing, and maybe it's because I'm so flipping tired all the time, that it's coming up on my For You page. It's about like the provider man and the soft girl life.
Yeah.
And sometimes I'm like, imagine if I turned to my audience, if you're still watching and listening to the end of this, it's actually like really vulnerable to say. Sometimes I'm like, maybe I want the soft girl life. Maybe I'm so flipping tired, I just want to chill out. But this is a narrative that is so shameful for a lot of women. I mean, I think it would be very difficult for me to just be like, I'm just not going to work anymore. I'm just going to chill out.
Yeah,
I think I'm just going to go for a coffee in the morning and do Pilates. Sometimes I'm like, how nice would that be?
Yeah.
Wake up in the morning, just go for a nice coffee, go to Pilates and do nothing. Like, where would the
do
day
that
go?
for a few days.
That's what I'm saying. Like for a few days, you'd get bored. But I'm saying like sometimes the idea of that though, like I'm like just one day would be nice to do that. You know, like not have any emails, not have so many devices. But anyway, my point is, it's a very awkward conversation to bring up for a man with a woman, and vice versa for a woman with a man.
Yeah.
Because again, because of those traditional roles, to say, by the way, I want you to sign a prenup.
Yeah. Oh, I've heard it I have a lot of impressive female friends, and they're having these very uncomfortable conversations with their male partners.
They're very uncomfortable.
Yeah, and one of them is like, I've heard it loads of times where they've said, oh God, he's flipped out about it. And I'm like, well, get used to it. Life's changed. Like, you know, we're stepping into a completely different era of life now. And I think it's just about protecting yourself. The sad reality is obviously 50% of marriages are ending in divorce. I think it's even ticked up beyond that now. And
I get it.
So it's just about protection.
Of course. And you don't know what's going to go wrong, and you don't know what's going to happen. So I actually think that we need to move the conversation to being so fearful and offended and so mortified when someone says, I've had to sign a prenup, and just being like, you're really successful and I get that you want to protect your assets because the world is crazy right now and I still love you. It doesn't show me that you don't love that person any less. And I think that that is a really difficult thing for some people to accept because we've trained our brains to think that.
Yeah.
What is the best piece of financial advice you've ever received?
The best piece of financial advice genuinely was learn how to teach it to someone else and then you know it. I think often people get stressed out by finance and money and go, I don't understand it. And I'm like, explain it to me. Explain it back to me. And if they can't explain it, then we can go through it and then I help them and we go on and on and on. If I'm like, if you can explain it to me, you get it. Don't worry. That's it. You've got it. And I think people fear that they don't understand everything and its intricacies. And I'm like, if you can explain it to me, you understand it. And then I think, and then go and teach someone else.
Yeah,
because you're spreading the knowledge. I think we often think we don't know enough to teach anyone else, but you do. You know way more than you think.
Yeah, I think that's so powerful. What is one mindset shift that completely changed your relationship with money?
Do you know what? It was investing in my business 3 years ago. When I left my last full-time kind of corporate job and invested in my company, I had so many kickbacks. My company originally just taught finance in schools. And originally we literally just taught in sixth forms. Like we were very niche. And I kept going, oh God, I don't know if it's going to work. And within days, like we had clients of like me starting this and it wasn't loads of money and I wasn't rolling in it in my first year by any means, but I kept coming back and I kept believing in myself and kept going, no, people need this. I've got this. I can do this. And then investing in myself in my second year looked like investing in social media for me. So I was like, right, I'm going to start social media and I'm going to do it. And I was very lucky. Like a video I did, like I recorded, I think in like the June, I posted it in the July, went viral. And I went from 3,000 followers that had taken me months to get to 40 within a couple of weeks. And my whole business shifted. And suddenly everything was just up a gear. And I realized investing in myself actually really worked. I'm not saying that I didn't invest in myself before, because what investing in myself looked like before I left corporate was I sat loads of exams. I trained to be a chartered accountant, and that was 15 more exams post-uni. And every exam I did was horrific. I swear, I hated all of them. But it was another investment in myself every single time. I knew I could do it. And by the end of it, I was so grateful they were done. But yeah, they were all investments in myself. And so, yeah, I've never invested in myself and not seen payback in some way.
I love that. I mean, investing in ourselves is one of the most underrated things in the world. And we've all done it, whether it's university, whether it's through a course, whether it's through makeup. Yeah. You're investing in yourself.
Oh my God, I got my makeup done this morning because I was filming today and I've been with you.
Oh God, I'm so sorry. And I cancelled our podcast this morning.
No,
I didn't cancel it. I moved it.
Well, no, exactly. And it was fine because I then just shifted the filming. So I did filming this morning and then I've come here this afternoon. And for me, as a woman, one of the most frustrating things I find in my space is that the men rock up in their suits,
it's so annoying.
Literally wash their hair 5 minutes before. Yeah. If we're lucky, they put moisturizer on. That's the limit we're getting from them. With us, I'm expected to be there full glam, like not to quote Adele, but full glam at like 7 a.m. in the morning.
Yeah.
And I'm like, I can't do it anymore. I'm not a professional makeup artist.
Yeah.
And so now I have an incredible makeup artist who is a friend called Bea, and I get her to come over and do it. And I pay her because I'm like, you are good at your job.
Yes.
You do your job well. I'll go and do my job well. I know obviously her job means I have to sit there and just, sit while she paints my face. But that is another investment in myself, is to go, I don't want to spend the day worrying about what I look like.
Exactly.
And
it's
so
all investment.
It's another investment.
Yeah. And I think that we overlook that sometimes as well. And we don't realize the more that we invest in ourselves, the more that we will reap the benefits. Yeah. This has been such a great podcast. I cannot wait to read the rest of your book. But thank you so much for coming, and I will see you very soon.
Thank you.